Double dip today. We're about to get into the truth about credit repair and debt consolidation. Look, the debt consolidation company's about to be big mad. What debt consolidation companies don't want you to know. Look, debt consolidation companies about to be big mad because right now we about to talk about everything they don't want you to know. And this came up because I actually made a post recently letting everyone know that I recently connected with someone that can help erase negative items off of your credit report. I mean, late payments, repossessions, collections, evictions, charge offs, whatever, right? Being able to do all of this legally because they actually work with a law firm in order to sue the credit bureaus, get the deletions, and potentially get you some restitution. So out of that, I had a flood of comments. I had a bunch of conversations with y'all. Shout out to everybody that took advantage of that opportunity, right? If you're still interested in getting connected with my brother that works with attorneys in order to clean your credit, just shoot me a message, leave a comment in this video, and just say collections, right? Just drop the word collections in the comments, even when you're watching this replay, and I'll get you connected to him directly. But during this conversation, I talked with a lot of folks who they were kind of, they were reaching out for credit repair, but in reality, they really needed debt consolidation. But here's the thing, debt consolidation isn't just those programs like National Debt Relief and others that charge you fees and destroy your credit. You actually don't have to go that route at all. Like, depending on where you are, you can absolutely do your own debt consolidation and save yourself money and the devastation of them destroying your credit. So let's get into it. I always like to start off with making sure we're on the same page and making sure everyone knows what we're talking about. So I went to Google and, I just typed in a couple of, what's the word I'm looking for? I did some term searches, right? So let's start off credit repairs. So that we're all on the same page, right? So Google AI is saying that credit repair is the process of improving a poor credit score by basically disputing inaccurate information. This can be negative information, inaccurate information, removing incorrect names or addresses, right? Setting up automatic payments, and potentially paying down your debt. Part of repairing your credit is debt consolidation, but credit repair in of itself is not the same thing, right? Debt consolidation can be a part of your credit improvement journey, but is not all encompassing. So let's talk about, all right, Jamal, in that case, what exactly is debt consolidation, right? And how is it different from credit repair? So we see here credit repair is basically like a bundled term. It incorporates multiple different ways of improving your credit. Whereas with debt consolidation, it's only one particular strategy. Now with debt consolidation, let me know y'all can see my screen. Debt consolidation is the process of putting all of your debts, multiple debts, into a single loan or a single credit card. The absolute best way of doing this is if you can get a zero interest credit card and move all your debt over to the zero interest credit card. Now later, before we get off of this, I'm gonna drop some super sauce on y'all and tell y'all how you can actually not only consolidate the debt that's on your personal, but completely move the debt off of your personal credit report completely in a completely easy, legal way. All right. So stay tuned for that because I'm going to give y'all the exact banks and exact ways that you can start doing your own debt consolidation and save your credit report. So now that we got these two out the way, let's talk about what this typically may look like. So we have two things that we're looking at when we're talking about debt consolidation. You have a debt consolidation program or debt management program. And these type of programs, typically what happens is that you may reach out to a company like National Debt Relief or some other nonprofit, right? Typically they're listed as a nonprofit, and you'll have the conversation with them, and their whole idea is that we're going to take all your bills and bundle it into one monthly payment. So if you're making credit card payments of like $2,000, you'll call this company and they'll put all of your bills together. And let's say you go from $2,000 to $1,000, $1,000 payment a month. Sounds great on the surface, right? But here's what they don't tell you. One thing is that all of your accounts that you put into the debt consolidation with this debt consolidation debt management company, they're closing all of those accounts. So if you're a person like me who love their credit cards, credit card points and rewards, say goodbye to all of those credit cards. They're gone now. The next thing that they're going to do is they're going to tell you, hey, stop making payments on these credit cards for at least 6 months. Stop paying all of them. Instead of paying them, pay us. Pay the debt management company. We're going to put all of your money into an escrow account. And then after 6 months, we'll negotiate with the different credit card companies. And then we'll start feeding them small payments a little bit at a time. The last thing is that this kind of program is typically 4 to 5 years long. So regardless of the amount of debt you owe, they're telling you that, hey, you'll be quote unquote debt free in 4 to 5 years. Sounds amazing because you have a clear path to debt freedom. But here's the bad part. One is, I mentioned, your credit cards are going to be shut down. So all of the accounts you put into this debt management program, null and void now. The next thing is that you're going to be locked into a 5-year contract with this debt management company. Another downfall is that they tack on fees just for doing this for you. And all they're doing is taking your money and dispersing it to your credit cards. It's not much of a benefit there. The last thing is that they're telling you not to make any additional payments on your current credit cards for 6 months. So during that 6-month time frame, guess what? Every single month you're not paying on these credit cards, each one of those credit cards are going to be marking you 30 days late. So by the end of this process, you're going to have 1, 2, 3. I don't know how many credit cards you got, but imagine you have 5 credit cards. You got 5 credit cards, each of them reporting a 6 months of late, and that turns into 5 charge-offs on your credit report. On top of that, you're still making payments for the next 5 years. So not only you're trapped into a contract, a 4 or 5 year long contract, you still got to go to credit repair after the debt management program because now all of your accounts have been charged off and they're destroyed and your credit report is totally wrecked. Here's a much better way to do this. A much, much better way to do this. All right. First off, you don't even need a debt management program. Everything a debt management program does, you can do 100% by yourself. And let's just go through these steps really quick. All right. So I'm about to actually pull up a little Google Doc right here. I'm about to type this out. So y'all know these are the steps that you can take. Okay. It's super simple. And this is something that anyone can do at any given time. You don't have to destroy your credit with a debt management company. You don't have to lock yourself into a 5-year agreement, right? You don't have to have 6 months of late payments. You don't need none of that. You don't need none of that. So the first thing you want to do, of course, is have a list of all of your credit card accounts, because debt management typically is mostly for unsecured debt. Unsecured debt is your credit card accounts and any like personal loans that you may have, right? Credit card accounts and personal loans. All right. Now, this particular method I'm going to be sharing with y'all, here's the dope thing. This is even better than a debt management program or a debt consolidation program because you can do these steps with any creditor that you have, right? There are various consumer protections and laws that mandate that every single creditor has what's called a hardship program. Most people don't know this, but whether you have a mortgage, whether you have an auto loan, a credit card, hospital bills, any type of bill, right? Even if you got a cell phone bill, all of them have hardship programs. That's the first thing I want you to know. Second thing is that every bill that you pay is a contract. All contracts are negotiable. Okay. So if you're one of the first things you could do is again list all of your accounts. This is debt consolidation, so let's stick with that. Credit card accounts and your personal loans. List them. How much you owe, right? Your amount due, okay? You definitely want to put down your due dates, interest rate, okay? And statement date. That's the first thing you want to do. Once you have all of those, you're going to call each one of them up. You're going to call each one and ask them and inquire about if they have a hardship program. Now, the hardship programs definitely became even more popular during the pandemic because, I mean, everyone was getting sick. People couldn't go into work for 2 weeks at a time. We had teleworking. So even with telework, if you caught COVID, you still couldn't go or log in sometime depending on how down bad you were, right? People were passing away. Folks were going from a 2-income household to a 1-income household. All of those type of things were happening. A hardship program is designed so if you get sick and you're not able to work for 2 or 3 weeks, right? That obviously is going to affect your pay. This is also for if you get laid off or you get so sick that you can no longer work, right? These type of things happen. So you're going to call and you're going to ask each of your creditors about a hardship program. Now, every creditor is a little different. With credit cards, typically what a credit card will do is they'll put you on the program. And in this program, they're still going to close the card. I'm going to be honest. Like, depending on how late you are in the program, the stipulations of it, some of them will close the card down, right? So you're not able to use the card anymore. But what will happen is that they're going to drastically lower your interest rate, depending on the bank. Some banks will drop your interest rate to zero. It'll totally just go to zero. You're not paying 30%, 25%, 18% on that credit card anymore, right? Now you're only paying maybe 4% or 0%. So one benefit is that your interest rate drops considerably. The next thing is that with the credit card programs, a lot of them will give you a set monthly payment that, in my experience with working with different clients, has been like literally half. Like one of my clients had a $1,200 bill with their Amex, and they did the program, and Amex dropped their bill from like $1,200 all the way down to $400 a month. Saved them a crap ton of money. Because a lot of these debt consolidation programs is not necessarily to improve your credit. It's to help you have more money at the end of the month, right? Another thing is with the hardship programs is not supposed to necessarily keep you from applying for a card in the future, right? A lot of times, if you're able to pay off the credit card, you can reestablish a relationship with that bank. Like in the instance of American Express, they have a whole like re-entry program. If, for whatever reason you messed up your relationship with them in the past, right? They have a special credit card, kind of like a training wheels, their version of a secure card that you can use in order to get back, on good terms with them. But it doesn't exclude you from applying with them again. Unlike if you filed bankruptcy, typically once you file bankruptcy, that relationship with that bank is burnt. They not rocking with you, you can't get back in. The hardship program also may or may not last for a long time. Some have temporary hardship programs where they may not charge you interest for like 6 months and you can pay up the card and you can keep using it. Some will have it to where they just shut the card down and you got to pay it off in smaller increments. Also, when we're talking about hardship programs, your auto loans and your mortgages have this too, right? So you can call your mortgage or your auto loan and ask them about their hardship programs. What are the stipulations? Does that mean you're able to skip a payment? Does that mean you get a lower interest rate? Does that mean they can alter the monthly payment that you make on your auto loan or mortgage? Each bank has a different perspective and different rules, so you can call them up and ask them what they're about their hardship program. But generally, like auto loans, a lot of them have like a payment deferment program to where they'll defer your payments up to 90 days just so that you can get back on your feet. Same thing with a mortgage. A mortgage, they may be able to lower your monthly payment, lower your interest rate, or they may be able to, they may have some kind of skip a payment program as well, where they may allow you to miss 1 to 3 payments without negatively reporting that on your credit report, right? So this is why these type of programs are better than if you go to a debt management program, because all of this is the same thing and you don't have to pay a debt management program a fee, because the debt management program will absolutely charge you a fee just to do this. And for you, this may be a 30-minute phone call, depending on if all of your bills need to be consolidated, or just one or two. You're just looking for some breathing room because one or two of the bills are a little outrageous, right? With the debt management program, you got to include all your debt into it. Whereas if you do it yourself, you're able to pick and choose. Because sometimes, I've been there, it's only one bill that's really kicking your ass. So call that one bill, ask about their hardship program. Okay. The something else you can do, all right, is before you go full blown hardship program, you can always, let's say you have a credit card, you can always call your credit card, and people do not know this, so please people don't know this at all. You can actually call your credit card and ask them to lower your interest rate. Every 3 to 6 months, I do this. I will call my credit cards and ask them, do I qualify for any kind of interest rate special or APR discount? And sure enough, sometimes it works. I had an American Express, my everyday preferred card. They would charge me, like, my interest rate at the time was like 22%. And I was just like, hey, y'all have any specials going on for interest rates? And they say, yeah, we have like a 5.99% APR for 6 months. I was like, shit, I'll take that. Going from 22% to 5.99%, I'm going to do that all day, every day. You're going to save a ton of money over those 6 months, right? So call your credit cards. Call your credit cards and ask for APR promos. That's what I call it, APR promo. You can always do that, right? Same thing with an auto loan, or in some cases a mortgage. You can always look into refinancing, right? They may have to pull your credit, but you can always refinance into a lower interest rate. You can always do that. You can always shop that around, right? One of my friends, I helped them refinance their car. When they got the car, they were in like the 650s, right? We got her up to a 720, and she was actually able to refinance her car going from a 12% interest rate all the way down to a 5% interest rate. It damn near cut her car payment in half just from doing that one step. Okay, so you can do all of these steps if you're looking into debt management or debt consolidation. And none of these require you to miss a payment. None of these require you to have 6 months of late payments or to charge off any of your accounts. Some of these methods are a lot better than doing a debt management program. Okay, now let's talk about debt consolidation. What does that look like? Debt consolidation is when you're going to get either a credit card or a loan to pay off your existing debts. Preferably, preferably the credit card or the loan is going to have a better interest rate, right? They're going to have a better interest rate than what you're paying now. You can do this with a personal loan or zero interest credit card. Now, some of my favorite debt consolidation loans and debt consolidation credit cards. I'm going to give y'all some of this right now. Happy Money is one of them. They'll do a credit card. They will consolidate up to $40,000 of your credit card debt, meaning they will pay off up to 40 grand of credit card debt. Right now, the average American has about $6,600 in credit card debt. Okay, so happymoney.com, great resource. They do a soft pull. All right, they do a soft pull. Boom, they'll tell you right then and there how much you qualify for, what your monthly interest rate is going to be, and what your monthly payment is going to be. Another great way to do debt consolidation is you can get a personal line of credit. You can get a personal line of credit from the best ones come from credit unions, like their Service Credit Union. They offer a personal line of credit that goes all the way up to $50,000, and the interest rate I think starts at like 8%, 7 or 8%. You can apply with them to become a member, get the personal line of credit, and use the personal line of credit to pay off all of your credit cards. Another option is you can always get a personal loan from another credit union. Service Credit Union is one. If you're with Navy, Navy is another, right? But go to your local credit union and apply for a personal loan. The great thing about this, why do you want to use a personal loan? Because the personal loan is going to wipe off and pay off all of your credit card debt. Once that happens, all of your credit card usage is going to go to zero, and that's going to give you an instant boost in your credit score. All while maintaining good payment history, so you're not worried about your score going down. And you're going to look like a hero to all of your credit cards. 8 times out of 10, you're going to end up getting credit limit increases with all of the credit cards that you literally just paid off. Especially once you pay them off, you keep the balances below 10% over the next 6 months, and then call them and ask them for a credit limit increase, right? That's the full game on that. Another be cool, both are great for doing debt consolidation and paying off your credit cards, right? Now here's where we get super saucy. For those that are looking for funding, right? We can get you funding on the business side, right? We can get you a business line of credit. We can get you a business loan. We can get you a business credit card. And you can actually take, let's say we get you a zero interest business credit card. You can actually do a balance transfer from your personal credit cards and move that debt from the personal credit card over to the business credit card. The amazing thing about this is that now On your personal side, all of those personal credit cards are now paid off completely. Another great thing is that business credit cards will typically give you a higher interest, I'm sorry, not higher interest rate, a higher credit limit, and the debt on that business credit card does not show up on your personal credit report. Now, I only recommend, there are three banks I do not recommend this strategy with because they will report: TD Bank, Discover, and Capital One. These three banks, their business credit cards report to your personal credit. So you don't want to do this using those banks. Every other bank, their business credit cards do not show up on your personal credit. So this is the best way to consolidate your personal debt. Move all the personal debt over to a zero interest business credit card. So now that you're not only saving on interest, all the debt is now hidden from any other bank. And this immediately puts you back into the good graces of all of your current banks and make you eligible for more credit limit increases and for new products, whether you're going for a home, interest rates just dropped. Interest rates just dropped. So now folks are definitely looking to buy a house now, right? We've seen that already. The home buying market is opening back up. Get yourself in position to take full advantage of that. If you're going for business funding and you're a startup, you absolutely want to make sure that your credit card utilization is low and you're able to manage your debt, right? You can use the same debt consolidation strategy on the business side, just like on the personal side. And if you're looking for any business funding to help with that, just reach out to me. You can leave a comment on here, just type business credit. You can shoot me a message, shoot me an email if you're watching this on YouTube, right? Or shoot me a DM. But these are the methods that you're going to make sure you take to heart and put into play to get you in a better position to kick off 2025. If you need any help with your debt consolidation strategy or with your business credit, business funding strategy, let me know. I'm here to help. My name is Jamal, the credit protector. I help small business owners get access to capital. And I'll see y'all on the flip side, all right? Peace.